3 publications in your inbox, also in the daybreak this morning. There'll be plenty of time for Q&A as well with all the analysts around. So, look, this morning I just wanted to touch on, Tom and I will just touch on our reporting season preview. So, look, it's one of the most anticipated reporting seasons that we've had in quite a while. I guess by our count, 20% of the ASX 300 have actually withdrawn guidance, and we've also seen 35 companies, or about 22% of companies under our coverage so far pre-report, when we've normally seen this number at around sort of 10%. So there's definitely some unusual patterns emerging, just given the unusual circumstances we all find ourselves in. So we think this will no doubt throw up some really interesting tactical ideas, and it makes individual company results actually very important as well. So in terms of our reporting season preview, we've, like the previous reporting seasons or the last couple, we've approached it in a Q&A style. So some of the burning questions that no doubt will be on the top of your minds as well as on investors' minds. So number one, we look at valuations, look at whether prices can continue to look through the earnings dip that we've gone through, try and make sense of the elevated valuations that we have across the market in all sectors. Secondly, we look at the best places of secure yield, just given we're in a low growth environment, I guess, with banks cutting their dividends, also the insurers likely to not pay or cut their dividends substantially. Where do you look for secure yield? Thirdly, we look at what could prompt the change of leadership. Obviously, the tech stocks have been doing quite well, as well as the defensive type of essential services type stocks, as well as healthcare. So obviously they've been the standout performers for the first half of the year. What could prompt a leadership change into other sectors of the market? We also look at the importance of guidance during the pandemic. Obviously, companies that have maintained guidance or reiterated guidance or brought back in guidance have been the ones that have been the standouts, whether that will be a thematic sort of moving forward as well. Number 5, we look at recovery expectations, what's currently priced in terms of analyst expectations, and where we see upside surprise. And then finally, we look at the equity raising dilution risk, and whether that's diminished, just given where we are at the moment. So I'll just touch on 2 points, and then I'll throw it over to Tom just to cover a few of his as well. But just quickly on guidance, obviously with AASB 16, COVID-19, the FY20 results are going to be very, very messy and hold less meaning than they have historically. So obviously very little pressure on companies to beat the pretty downbeat FY20 forecast. But offsetting that, I think what you'll need to see is companies will have to balance that out with perhaps better than expected outlook commentary, given where some of the valuations sit across the market. So key areas of focus for us is the trading updates over the last few months, how trading has gone, particularly since some of the lockdown restrictions have eased, and perhaps some of the impacts that we're seeing out of Victoria as well. We'll be looking at how much fiscal stimulus is required to essentially support the bottom line, how much that is essentially supporting the business as it stands, and then whether companies will provide FY21 guidance. I think that will be a key sentiment indicator for us, whether corporates are game enough to actually provide it, just given the uncertainties just playing out. So with little guidance in the market, just this chart here, it's no surprise that the earnings estimates are right now all over the place. So what this chart currently shows is the current earnings dispersion across all sectors of the ASX 200 and the historical variation. So the blue line gives you the 5-year average, and then where the grey line sits. So the higher the grey line, the more dispersion, or the greater the range of analyst forecasts within that sector. So here you can see quite a number of sectors with big variations. So the industrials, energy, not surprisingly, but also a material step up in healthcare, financials, discretionary. So look, it's going to be a fairly uncertain reporting season. So one thing's for certain, we can expect some pretty volatile moves on result day. Joe and Nathan will go through the individual candidates, the surprise disappointment candidates that we think could provide some volatility at the results. But finally, before I sort of throw over to Tom, Um, just talking about what could prompt a bit of a leadership change in the second half of 2020. And I was looking at some of the factors that have really determined sector and market returns over the last 6 weeks. And what you can see there clearly is, as you'd expect, sales revisions, positive EPS revisions, really driving the bulk of the returns over the last 6 weeks. Whereas on the right-hand side, the worst performing factors are the analyst dispersion. So where you see a big range in forecasts and the uncertainty heading into reporting season, investors are really staying away from that segment of the market. So looking at what's actually caused a lot of the upgrades and downgrades more recently, where is the momentum in the market? And you can clearly see some of the high PE names, some of the sectors that have done particularly well. Perhaps the market has extrapolated some of those earnings a little bit too far and have since toned that back prior to reporting season. You can see their staples, pharmaceutical and biotechs, as well as software and services. So IT have been net downgraders, whilst on the other end, some of the domestic cyclicals like media, retail, transport stocks, even some of the healthcare names, healthcare service names have been upgraded into reporting season. So perhaps some of the downbeat expectations that came out of the early part of COVID-19 are now sort of playing catch up, and we think potentially you will start to see some of that rotation back into the domestic cyclicals from some of the high PE names, just given the momentum within that sector. And what we've also seen is some short interest actually come right off. There's a chart in the actual report that looks at short interest ever since the market sort of bottom in March 23, and we've seen short interest actually wind right back. Despite the ASX 200 up 30% over that time, we've seen short positions wound back, and some of the positions in some of the domestic cyclicals get wound back as well. So